Hey everyone, and welcome back to Trend Guards for another explainer. So let's just dive right into this today because we're looking at a massive, unconfirmed but heavily reported story that could literally rewrite the entire architecture of the AI industry. We're talking verified reports right now that the payments giant Stripe is in active talks to acquire the AI API gateway OpenRouter. Our mission today is to break down exactly what this means, relying only on the verified facts, looking at the technical infrastructure, and really unpacking the financial mechanics that are driving this potential mega deal. Just look at this number, $10 billion. According to breaking reports from both the Wall Street Journal and Axios, this is the proposed acquisition price. Now, as you know, here at Trend Guards, we aren't here to buy into the hype. We're here to analyze the reality of a staggering figure like this. For the last couple of years, the whole tech world has been completely fixated on the labs building the models, right? Burning billions on compute. But this $10 billion figure, it represents something entirely different. It represents a quiet, strategic battle for the actual plumbing of the AI economy.
And honestly, this brilliantly illustrates the core mystery that we need to unpack today. As this reporting from the Wall Street Journal and Axios points out, a $10 billion price tag is a staggering, near 8 times markup over OpenRouter's $1.3 billion valuation from just May of this year. So from a purely analytical standpoint, we have to ask, why on earth would a payments giant pay an 8x premium in a matter of months for an AI routing layer? Nobody pays that kind of markup for a simple software wrapper. So what exactly is Stripe actually trying to buy here?
Let's draw a hard line between what's fact and what's still up in the air. The Wall Street Journal and Axios have both independently reported that active talks are happening. The proposed price sits at roughly $10 billion, which, like we said, mathematically is an 8x markup from their $1.3 billion valuation recorded in May. But, and this is absolutely crucial, this deal is currently unconfirmed by the companies themselves, and it hasn't closed yet. We are analyzing a reported structural shift here, but as always, we're keeping our feet firmly planted in verified reporting. You really have to look at the absolute engineering nightmare developers have been dealing with to understand this. In the old method, if you wanted to build an enterprise tool, you were constantly routing to different models for different tasks. You had to manage 10 different APIs, 10 sets of keys, custom load balancers just to handle rate limits, and then at the end of the month, you had to reconcile 10 separate invoices. Total fragmentation. Well, OpenRouter completely solved this. They built one unified API gateway. Developers just write a single API call, and OpenRouter intelligently routes it to any of over 400 different models, complete with fallback routing if a network goes down. And the best part? You get exactly one aggregated invoice. They solved the fragmentation headache, and by doing so, they basically became the default on-ramp for developers. They aggregated all the demand.
So, aggregating demand is only part of the story. A really massive piece of context here is an earlier acquisition Stripe made, a company called Metronome. See, in the traditional SaaS software world, billing was pretty straightforward. You charged a flat $50 a month and called it a day. But in the AI world, billing is incredibly complex. You are charging per token, per API call, literally metering billions of micro events in real time, and you have to do it without crashing the whole system. Stripe acquired Metronome specifically to master this complex, usage-based billing infrastructure. When you combine Metronome's capabilities with OpenRouter's API gateway, that right there is the real key to understanding this $10 billion price tag.
Let's actually walk through exactly how this combined infrastructure flows in practice. Step 1, an enterprise application requests some AI compute. Step 2, Stripe, powered underneath by Metronome, instantly processes that micropayment. Step 3, OpenRouter routes the request to the best possible model. And finally, step 4, the model labs provide the compute and get their financial settlement. The crucial takeaway is this: Stripe isn't just trying to buy an AI router. They're fusing the routing layer with their billing layer. By owning OpenRouter, Stripe would essentially own the entire transaction ledger, ensuring that every single token microtransaction flows directly through their financial rails. So, what exactly is the Agentic Economy? It's this emerging system where autonomous AI agents execute tasks in the background and actually transact with other machines. Think of an AI travel agent negotiating a flight change with an airline's AI agent. The fundamental roadblock here is that AI agents obviously don't have credit cards, and they can't exactly pass compliance checks to open a checking account. They need native, programmatic financial rails that can settle these microtransactions in milliseconds with fractional cent precision. By grabbing OpenRouter, Stripe is positioning itself to be the central bank of this machine-to-machine economy. The agents consume tokens, and Stripe meters, routes, and settles every single interaction in one continuous, unified loop. Up until now, the entire value proposition of OpenRouter has been its strict, uncompromising neutrality. It was an honest broker.
But if a massive payments corporation like Stripe takes ownership, well, that neutrality is inherently going to be tested. There's an objective risk here of preferential routing or maybe offering discounted billing to startups that use Stripe for their payments. On top of that, major model labs like OpenAI and Anthropic really want to own the direct enterprise relationship themselves. If one single entity suddenly controls 40% of all API traffic, those labs might view that aggregation as a severe threat to their own business models. And of course, consolidating the routing and billing layers of the entire AI industry like this, that is highly likely to attract some serious scrutiny from the FTC, regulators enforcing the EU AI Act, and global antitrust watchdogs.
Let's map out how the power dynamics actually shift across the industry. For developers, this is a clear win in the short term. You get a totally zero-friction, unified dashboard. But long-term, you're facing high switching costs and platform lock-in. For the model labs, this is largely a loss. They risk being commoditized into simple compute providers and losing out on those very lucrative direct enterprise contracts. For middleware startups out there trying to build their own routing or caching layers, it's a massive loss. You just can't compete with bundled financial infrastructure like this. But check out the bottom row, enterprise CTOs. For them, this is a huge win across the board. They get one vendor, one neat SOC 2 compliant invoice, and incredibly stable, trusted infrastructure from a major financial player. Based on all these verified market shifts, here is the actionable playbook for the industry going forward. If you're an AI startup, the era of building thin wrappers around LLM APIs is over. The routing and billing layer is consolidating fast. You have to compete on proprietary data and user experience. If you're an enterprise architect, whatever you do, don't hard-code direct API calls. You need to implement an internal AI gateway abstraction layer right into your code base so you can easily switch your routing if pricing models change. And for the investors watching, the next big phase of this agentic economy means keeping a very close eye on companies building tools for agent identity and agent escrow. These are going to be the financial primitives of this new machine network. So, we're going to leave you with this final provocative thought. As we watch this reported $10 billion deal unfold, the ultimate question really comes down to this. Will Stripe's infrastructure successfully accelerate enterprise AI by solving all this billing and routing friction? Or will severe regulatory pressure and massive pushback from the model labs completely fracture this aggregator model? The facts on this are still developing, and we will be right here to analyze them impartially as soon as they drop. Thanks for joining us for this explainer. Keep focusing on the facts, and we'll see you next time.
Thanks for watching. Don't forget to like, subscribe, and share. It really helps the channel grow. See you in the next video.